Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar attempted to stabilise ahead of the labour force report today as traders weighed hawkish RBA expectations against the broader US dollar strength. Markets continue to price a high probability of another RBA rate hike in June, although today's weaker employment figures dented momentum after Australia's unemployment rate rose to 4.5% from 4.3%, while the unemployment unexpectedly fell by 18,600 in April against expectations for a gain. Despite softer data, expectations for a tighter RBA policy later this year remain largely intact. Overall, slower growth aligns with the RBA's recent rate hikes amid at cooling the economy. Eyes now turn towards Friday's swearing when Kevin Walsh becomes the new chairman of the Federal Reserve during a special White House ceremony administered by President Trump. Turning to the technicals, the rejection from the midway point and also the MACD supporting the bearish case, I still feel that the technical downside is towards 70.70. Now, a break beneath there could give further weakness towards 70 cents and reassess from there. Turning to the euro, the market was a little bit to the upside as gains attempt to come in with the bullish divergences, so keep a watch on that, just in case we do get a slight knee jerk to the upside. The movement come in after a stronger Eurozone inflation data boosted expectations that the ECB could raise rates sooner than previously expected. The Eurozone HICP accelerated to 3% in April, reinforcing market pricing for a potential ECB rate cut in June, although weaker regional growth continued to cap the euro's upside momentum. Meanwhile, the latest FOMC minutes highlighted ongoing concerns around inflation and the economic impact of the Middle East tensions, with policymakers signaling that further tightening could still be appropriate if inflation remains elevated. Keeping this in mind that the US dollar found support there. Turning to the technicals, as I mentioned, there is some divergence to the bull case, but that could also buckle if we do see another down test and see a break of 116 that could open way towards 115.65 or lower to 115 where I've highlighted, and then we may get the bounce or a correction. Dollar yen, well, I'm still not in the camp to support a bull run. I'm in more of a camp that the bears are going to come back into play and therefore look for another down test. Looking at the area where we are in, it is called the intervention level because we've seen a couple of times of interventions from the BOJ. But Iran talks have calmed the markets, so let's see how we play into the next 24 hours and still not ruling out another down test. Sterling, well, after an engulfing candle, the market came back very strong, but couldn't break through that 134.60 level, hitting there and pulling back very sharply. Mixed technicals does give some question whether or not that we could see a down test back towards the bottom side of the range. So I'm not a bull, and therefore let's see if we can or watch for supply to return, as the technicals are still somewhat negative. Wrapping up with commodities, well, we did get a bounce in gold and back above 4,500 after challenging this trend line around 4,475. But the technicals haven't overly supported the move and therefore could see another down test. Still expect to see demand somewhere around 4,400 to about 4,450. But overall, let's see if we get that pullback before the bounce. Turning to oil, once again, it could not sustain above 100 and plummets back towards the lows seen today around 97.5. As I mentioned before, it does not like being above 100. And every time we get up there, it never sustains. And we get pullback, another pullback, and one in play now. If we get a return visit up there, I still believe the market will not sustain. The reason behind that is the MACD is very weak. So the bulls don't have the dynamics to keep the prices above 100. Well, that's a wrap. Thank you for joining me. As always, look out for the intraday report. I hope you enjoy the great start to the day.